All right, markets this morning. Obviously, we got flushed yesterday and continuing on here just a little bit this morning. Canola down the most here. Canola and bean oil down about 1%, but canola's down $6.40 a ton, trading at $784.80. Soybeans only down half a penny at $12.13. Bean oil down a full percent here, $68.73 is what I wrote down there. Corn market up 5 cents at $4.56. Kansas wheat down a penny, $7.28. Spring wheat down 5 cents at $7.01. We've got the Canadian dollar trading at 71.06, and West Texas down $1.20 a barrel here at 81.43. We'll see if Brian has some insights for us on what is going on here with that big flush in the markets. I've got Summerville urea, pardon me. I don't want to say this number out loud because it's up about $100 a ton from the values we saw just a few weeks ago, but I'm hearing mid eights, 850, hearing some 875 for Summerville urea. Hopefully you can find something lower than that, but with the war getting fired up a couple of weeks ago, fuel prices climbed and fertilizer urea values climbed as well. So there we go. From a headlines perspective here, and I'm going to bring Brian in because there may be extra things to cover off here that I'm missing. Let's see if we can find him here. Brian, welcome to the show here. I was going to do headlines, but there's quite a bit to cover, so I thought I'd bring you in a little earlier today.
Thanks, Ryan. Good morning.
And as I said, you may have heard this backstage, but if my internet completely fails me once again, the show is yours, dude. I will be back, but the show is yours. All right.
No pressure. Yep.
All right. So for headlines this morning, we have corn, U.S. corn. It came in 63% good to excellent. A little bit of a miss by the trade. I think they were at 65% good to excellent. Brian, am I onto something on that one?
Yep. I think there was a bit of a surprise there. I think you can see that in the market with that, nickel and 3/4 or 6 cents up in the market today. So, I think that's one of the reasons why corn is one of the only, well, I shouldn't say the only, but the stronger of the grains this morning.
Soybeans 63% good to excellent. Last year, that crop at this time of the year was at 70%, but the trade was a little closer on that one, I think, within 1% or so.
Yeah. Yeah. The variability too hasn't been as bad. So there were big changes in the corn in some states and a little bit more even of changes in the soybean side. So yeah, less volatility, I guess, in the crop ratings.
And then a little strangely here, because I've got conflicting information. I've got North Dakota, South Dakota, like heating up, burning up, things not looking good. But then spring wheat comes in 53% good to excellent. That is actually better than the crop was looking at this time last year. Anything that you see in spring wheat, Brian?
Well, we saw a big improvement in the state of Montana. And, I think there was perhaps some small concerns in North Dakota, but again, they had a good moisture profile there already. So the damage was not as widespread, but where we saw big condition upgrades was in Montana this week.
All right. Fair enough. Winter wheat, 81% harvested. And I think the trade was just a little interested that it kind of fell behind pace. The trade thought it was going to be a bit more advanced on that winter wheat harvest. So Brian, I didn't ask you this before we hit the button to get going, but protein, I'm starting to hear of some protein premiums out there and put premiums in quotations. I have not looked at the winter wheat crop to see how protein is hanging on. I thought a small crop might lead to higher protein, but and maybe they're not correlated right now. But anything protein wise that you're seeing or winter wheat harvest wise?
The Wheat Associates reports are showing good protein, not exceptionally high, but it isn't necessarily causing the market or the basis, I should say, to react. So there is still some pretty decent premium, I think, in the, let me just see here, Kansas, 740, so there's a premium right now to Kansas wheat over, Minneapolis wheat.
Yeah.
And it's been like that for a while. So I think, if anything, that's reflecting, the short crop in Kansas, well, and the whole U.S. Midwest.
Yeah, fair enough, for sure. All right, moving on from U.S. crop conditions, we've got two flash sales of soybeans out of the U.S. yesterday, one to an unknown destination and one to China. We also have Australia crop prospects improving from what I can see on wheat and lentils. That's kind of the latest out of Australia. I've had that question come in here over the last couple of days. How are those crops looking? Sounds like they're doing okay. India monsoon season, the rainfall has started to stall here in July. So trade is keeping a very close eye on that one. Of course, super El Nino events tend to lead to drier conditions in Australia and India. Not so much the case in Australia yet, but India starting to maybe see some of those implications here. I've got a couple of things out of Oil World this morning. Again, they just note the rise in canola exports from Canada. Just a heck of a recovery. It continues to be strong here in June, strong in July. We are doing a great job of exporting Canadian canola. So that's a good thing, helping our price. And then just a little extra in there, the European rapeseed crop suffering a little bit of a decline here. Of course, wildfires rage in France and in Spain. Lots of talk around the French corn crop, suffering here towards the tail end of that production cycle. And here we go, a rapeseed also being impacted just a little bit. It's just a slight decline. So, Brian, we had a whole market, liquidation yesterday, including cattle liquidated as well. Now, was this war stuff? Was it weather? Was it both? Or was it something else that I'm completely missing this morning?
Yeah, I think the catalyst was largely the ceasefire, if that's what you want to call it, the stall or the pause,
the less bombings,
in conflict, the less bombings. And, we've seen now that these announcements mean very little. But what I think it did was it gave the market an excuse to take profits, to take some risk off the table. That's always important. In these markets, we always, kind of talk about stairs up, elevator down. And that's what we did see over the last couple of days. Hard to quantify this exactly, but this is a big earnings week for the stock markets. 25% of the S&P 500 is reporting this week. And there could be some traders that are, again, taking profits in order to give themselves some opportunity in earnings week.
All right, fair enough. When you look at the decline yesterday, and we did have a question come in here. I'll see if I can find it. We have a big list today, Brian, so I'll dive into a couple right away. But we did get a question here about, canola's been hit a bottom last December. It's a roller coaster that it's been on since. Could this be the high for the year? Now, let's say we're in 2026, because we are, but are we aiming for a high in this window here, over the last couple days? Could that be possible? That's what Robert is asking.
I think it depends on how you're looking at it. Is it probably a high, or is it more likely a high, before harvest? Yes, the likelihood of that is higher. But as you mentioned, the exports in canola, the crush in canola has been really strong. That's going to shrink the balance sheet for this 2025 to 2026 crop year. And then that's going to carry over into 27. So if we see, similar demand coming out of harvest here, like the ending stocks projections for the end of 2020 crop year 2026, 27 could be significantly tighter. And so as we move through spring next year and the supplies dwindle, that could potentially give us new highs for this crop year. But that's a long wait.
Yeah. And like when I look back, you often see a high, associated with May, June, July, like that time frame. You can find a high, but I'd still say that, the crop prospects for Canada, until we start to get some harvest data, there's some unknowns there. Demand is strong. We'll see here how the market responds over the next couple of days. Again, you get a big flush, a big pullback. Is this a buying opportunity, or, is this a slight setback before we go and make a new high? You could even find examples, and I'm sure you've seen these too, Brian, where, canola goes on a nice little run into the September long weekend. Like we've seen that in the past as well. And maybe with some delayed crops here for a lot of the prairies, a little bit more strength could occur. Now, Robert, I would also just come down to, the easy answer here as well as, if you like these values, they're highly profitable, don't be a stranger. If you have a mechanism to, and I know you do, to unlock, some upside, but protect a floor, you can always consider that. I don't think that's a bad idea as we sit here towards the tail end of July. All right. So Brian, let's start ripping through some of these questions here. Unless there was anything else news related that I missed. I think we covered most of it, but Ag in Motion was a bit of it was a fun week. It was a gong show, but I'm a little behind. So anything else that I'm missing?
I would say an important one to watch is the conflict between Russia and Ukraine. That was a big driver of wheat last week. Zelensky is meeting with Trump, I think this week sometime. And so there's, I don't know if risk is the right word, but there's some potential for de-escalation, and that might, affect our wheat prices. That'd be the one I'd add.
On Sunday, I'm watching, like many, this vessel full of corn, I think bound for Turkey. I'm watching this thing sink. Yeah. And I'm thinking, oh, well, here we go. Like this is, the market's really going to get alarmed about this and rally. And then of course we have the big flush happen after that. So, but yeah, that's a big one, that de-escalation. When it comes to wheat prospects around the world, I know that it's tightening up. We don't have the crops in 26 that we had in 2025. But yet those sharp rallies, you kind of need a disruption in your major wheat exporters. I think Russia's number one. I think I read this morning, Ukraine's number 5 or number 6. If you can disrupt the export side, then maybe that provides more strength. But if you take that storyline away, I don't know. Like, I'm not scary, bearish by any means, but I also wonder what it would take to rally this thing, because the wheat markets get darn quiet after harvest if we have a normal harvest. So, yeah.
Yeah.
All right. On that thread, Jordan comes in and he says, when it comes to Minneapolis wheat, what do you like to use in your brokerage account for hedging? Or what options do you like to use? He also mentioned, do you go instead to Kansas or Chicago wheat because of the thin liquidity there in Minneapolis? But Brian, what do you like when it comes to hedging wheat?
Inside a brokerage account, I mean, it's obviously the straight up hedge would be if you wanted to sell and take, and lock in some profits on the future side. Going short in a futures account is a good way to do that, because it does leave you open to take advantage of basis specials and things like that with your grain company. And they tend to throw those basis specials out, long after they would have locked in basis on a futures first or whatever they're called at the elevators, yeah. Right? So that's that comes with, the potential though for margin calls. But if that's, there's a trade off there, I guess, a little bit. Minneapolis wheat options are terrible. Mm-hmm. I think if you're going to go into the options market, then I actually think Kansas would probably be a better place to go hedge. It's not perfect hedge, of course, because the two are not perfectly correlated. In fact, there's a premium right now to Kansas. Yeah. So again, if you really wanted to get a perfect hedge using options, you could spread the Minneapolis and Kansas to lock in the spread there, and then use an option on the Kansas, which might get you the desired result you want.
I think the one key mechanism here is that you want to, and I've seen this before in the past, but you want to keep your discount, your premium schedule kind of flexible if you can. See what you have, see who's paying the best premiums or the best discounts if you're in that category. That can be pretty significant dollars at the end of the day. It hasn't been the last couple of years, but it certainly can wreak havoc at times. So I like keeping that open. Again, it's a fine dance between I need to move stuff off combine or at harvest and then trying to figure out the spreads, but just stay sharp on those. And Brian, if we keep talking here, canola is not in the green yet, but everything else is in the green, including cattle. If we keep talking, I think we can get canola in the green before we hit the stop button today.
Nice.
All right.
Let's keep going then.
Greg is asking, how big of a market is malt barley from an export side? How big is the malt market versus the feed barley export program? And before we started recording, I was like, I don't really know. I find it convoluted and confusing, and you're like, Ryan, I got you. I got something. So what do you got for us?
The malt market this year has been really strong. Our exports are largely malt. We've seen a big increase in malt exports, particularly to China. We've, the export data into the end of May now has almost 1.2 million tons of malt barley going to China. We also have seen, about 790,000 tons of feed go to China. Both of those are up significantly year over year for these months. We've also seen big upticks in Japan as far as both. They've let's see here, they're both about equal, but so that's an interesting statistic there that they're taking just as much malt as they are feed. Usually, it is a little bit more malt. We're seeing a lot of malt go into Mexico. And, but, year over year, our malt to the US is going down. But I mean, China's the big one there. I did, email you that chart. So if you want to share it, go right ahead and do that. But, yeah, big numbers. China's the big one. China's the big driver this year with, Japan coming in solid second.
So do you think, we did get asked here by Jack, like, where's the barley price going? Is there a shortage of barley out there? And then I have a follow up here from Edward about malt barley. Doesn't make sense. If I have nothing sold today, should I be pricing malt barley right now? So Edward's asking about malt, what to do for the 26 crop, and Jack's wondering, is there a shortage out there and is there some upside? So kind of both asking a very similar question.
I think a lot of it depends. There's decent acres of barley put in this year because of the profitability last year. A lot of it will depend now on yield. But yeah, the demand has been spectacular this year, like one of the best we've seen. And again, it's hard to argue against that changing. Nothing fundamentally has changed in our demand structure. So it should be good. I don't know if shortage is the right word though, but there we go.
Did that show up?
It did.
Oh man.
Yeah. I did forget to change the month though. August to April. It's actually August to May. Statistics Canada is released up till May. So this is data up till May. But yeah, you can see the difference there in China is just huge. Yeah,
you bet. Okay. So, my thoughts around, like feed barley prices. I've been a fairly aggressive marketer of feed barley. So I haven't been, overly bullish on the feed barley side. I think there's a lot of feed grains out there. Again, domestically, I think there's a lot of feed type stuff out there. On the malt side, I've been quite patient because, we started in the high fives here in Alberta at the domestic maltsters, and that just didn't you get forced though. You have to do something to lock in a contract, which is a little unfortunate that you have to commit to something even though you don't agree with the price. But anyways, maybe that'll be for another episode one day. But I've been patient, and I think we've been rewarded about 70 cents of upside here with that patience. So if I was doing anything on malt right now, it would certainly still need an act of God, because price wise, I'm pretty friendly towards malt at this time, and quality, if you have a miss, it could be painful, right? If you have to get out of that darn thing. So yeah. The way I always look at it is, if prices are profitable and they hit a target that you made at some point preceding and stuff like that, marketing is not all or nothing. Mm-hmm. You're not making one decision for the entire crop at one time. So you're going to be either leaning into, potential upside afterwards or downside. And neither of those is really, feels optimal, because but you're never going to hit the high with everything. So if it's profitable and it's good time to start marketing, that's generally what we advocate for before harvest, because a lot of times the prices too, they take, months after harvest to get back to a place that looks good. Harvest is always the big flush of supply. Yeah, for sure. All right, let's stay on cereals here before we switch over to some pulses. But Ryan was asking about oats. With the drowned out acres in the east, wouldn't you think oats would get over the $4 mark? Brian, I'll kick it over to you to start off with here. And on oats, is there any support coming to that price? I've checked a few things out here lately. It looks like price is certainly not declining at this time, but any thoughts around the oat markets?
Yeah, I think that there's some upside, particularly later in this crop year. The northeast part of Saskatchewan is under stress. There's lots of oats planted there. Southern Manitoba, though, is in pretty good shape. There's lots there as well. And living in Southern Manitoba are doing the 120 kilometer an hour field assessments. They do look pretty good. So I think it's a bit of a balance between the two, and then the demand needs to come in. So again, North Dakota, Minnesota, and the U.S. is in pretty good shape as well. And so, most of our oat exports head south. So it's, there's a bit of you got to look at the U.S. side of things too.
Yeah. And I'd also add, the Peace region, a big oat growing area for the prairies. And the crops look quite fine there as well. Now, Ryan, I would say that in the Saskatoon region, we did see oats trade. I want to say the 430 a bushel, 435 a bushel, something in there for around that December timeframe. And I know that is also available in central Alberta. So, again, maybe it's making its way there, and we are starting to see a little bit of strength come across. But I would certainly put a 425 to 435, for that, December, maybe January timeframe as being available. Alrighty.
Yeah. That's a pretty good price.
Yeah. It's especially if you can get some decent yield out of them. There's some decent margin there. All right, just a couple more. I know we're over time today, guys, but this is going to be our last cup of coffee, a live show for quite some time here, and I'll talk about that a bit at the end. Just a couple more to go, though, Brian. We'll switch gears now to yellow peas. Dave is asking, do you think the yellow pea price will go higher than $8.50 a bushel, and when? If you could give us the date, the time, and where the sun will be in the sky.
Perfect. Let's say November 15th. I don't know.
Yeah.
The yellow pea market has been depressed because of the supplies. I think there is a generally big supply still coming, but, the markets, again, never stay where they are all the time. I do think we'll see lower nines, maybe even mid nines at some point. And that'll be good. And I think, I think as you were mentioning before about the India monsoon, if we do see some deficiency there, that market might open up a little bit, and they may, try to get some product shored up before their harvest, just to make sure they have enough supply. They have been getting a lot from Russia, though, so that's one area that we have to watch. Which there's not a lot of transparency around yellow peas in Russia or anything in Russia at this point.
Yeah.
But so that's our competitor.
I would also say, to add to that, Dave, is so one of my big learnings from crop marketing over the last 10 or 15 years is that for a long time, my first yellow pea sales were my worst sales. The price would come out January, I'd sell something, and then by the time we got to the summer, the price would climb quite substantially in most cases. I've been a pretty patient, very patient yellow pea marketer as of now. I think the interesting thing is the demand from China and India. If they are happening at the same time this fall, that would be an important thing. And I don't think line companies have great coverage on their cars yet. That will switch at some point where they need it and then they don't. So it's a fine line. But opportunity here, in my opinion, will exist here for, some off combine pea movement, and then we'll go from there. On a lot of our specialty crops that have carryover, if you have less acres planted, patience is, I think, just an important thing. If you can manage cash flow and stay patient and let some of the specialty crop prices work higher into the winter, again, there's no guarantees, but that could be a likely scenario for us. So, I think you'll get a shot at some off combine stuff, and then patience, will be important after that. All right. Just a couple more here for you, Brian. We talked about this a lot, but Cam's asking about the U.S. biofuel programs and the effect on our canola price. I would say if there maybe just one thing, Brian, that stands out there today, about that impact. I don't think, I won't get you to predict canola price after that.
No, I think it's positive, net positive. I think all the speculation around what the targets are going to be is worked through. Although Trump was threatening some more tariffs and all that kind of stuff. Maybe it's because of wildfires or whatever it is, but canola oil was left off of that tariff list. I think that's good. They still need a lot of vegetable oil, and their own soybean S&D is also shrinking. So that's their crush capacity isn't rising, and there's nothing really on the horizon that's going to increase their crush capacity. So if the demand for vegetable oil continues to go up, they're going to need to import it.
We have a good policy in place right now. As long as that policy remains, that equals strength for canola and the demand for canola oil. Again, the stroke of a pen can change that, but for now, it's positive. It's a good thing. It's very promising. So we'll go. We'll leave it at that for today. Jason's asking. He's used Cargill and his own broker to execute strategies, and he just noticed that at Cargill, it's a bit more of a take it or leave it when it comes to the cost of a put or a call. Like it's just here you go. And with his broker, he can negotiate and put in an order and let the market kind of come to him a little bit. Brian, you were the guy at Cargill for this stuff, but any comments around that?
Yeah, I mean, you're always going to get better pricing with a broker. They're trading right at the market. The brokers themselves aren't looking for any extra juice out of the execution price. So, it is, kind of what you get is what you get on the brokerage side. Whereas the OTC market it's a little more opaque, I guess but there is some benefits, right? You can execute exact numbers. If you want to do a put at, $879.40,
you can do it. You can
put that in. Whereas the broker, you're kind of, limited to, $5 or $10 spreads. Also, you don't have to pay anything to the grain companies ahead of time. So it can look cash flow friendly and that kind of thing.
No upfront margin cost. Yep.
No upfront margin cost. Again, though, the basis comes into play. If you do, a put option with an elevator company, they're going to want you to lock in the basis, probably somewhere around 6 weeks before the delivery period. So that limits, some of the special bases that can come out in those last 6 weeks.
Yeah, fair enough.
Everything has a trade-off.
Pros and cons. And I certainly, if you don't have a brokerage account, I certainly would encourage you, though, to not just Cargill, but Bunge as well. Some of the other companies that have tools, like it just changes your crop marketing and unlocks some really good opportunity for you. So certainly don't be a stranger there. And one last one for you from Curtis. He's just, talking about holding physical grain here from November to March, November delivery instead, pushing it over to March delivery. Just what factors do you consider when making this decision? And he does mention, balance outstanding on lines of credit and interest rates and things like that. But Brian, anything else, when you carry grain forward that you're looking at here for gains or a percentage gain?
Yep. I think, you and I, Ryan, before we got on here, we talked about interest rates. And if there is borrowing, happening to fund, crop inputs or whatever it is, the interest rates are not low anymore. So there is a good argument to make for getting cash flow earlier in the year. If you don't use leverage or any kind of borrowing in your farm operation, then it makes a lot more sense to hold it. And I think a lot of that has to do with basis levels, right? I mean, they're always terrible in fall and they get better as the year goes on. That's probably your biggest opportunity if you're not trying to predict futures values. And, the other one is carry in the market. There was, let me take a look now, but there is some carry in the canola market. It used to be a lot larger. There's definitely some carry in the spring wheat market. So, you can get some extra juice out of hedging on further out months than, in situations where there is market carry.
Yeah. And I'm going to just go down a simple path of, logistics as well. And and weather. When can you get the work done? Does that play a factor? On a lot of farms I talk to now, consistent delivery at certain times of the year is almost trumps the price, especially if you have a other mechanism to participate. So there's that. And then just the quality, keeping the quality of that grain. I met a farmer at Ag in Motion last week that unfortunately lost about 20,000 bushels of canola that heated on him. And well, we all know that pain, especially as it trades around $18. So, well, Brian, that's it for questions this week. I wanted to get them all tidied up here as Cuppa Coffee goes dark here for the next while. And, I asked folks, what do they like about Cuppa Coffee the last 2 weeks? And they said they love the short segment, the 20 minutes. Now we're going long here today, and they love that, the questions are pretty current and the guests are kind of answering rapid fire as we go. So, I totally understand that, folks, and I appreciate the comments, but I am beginning a little bit of a recalibration here, 12 weeks of sorting some different things out, for the What the Futures podcast. So this is just the beginning of other changes coming down the pipeline. Now, again, it's been a fun show and it's been great to put on. I am doing, the content continues. Like the content always continues. I'm always putting stuff together and putting stuff out. And I am launching for now here, just a private podcast feed, called What the Futures Insiders. And so it's not automated yet. You do have to email me, Ryan at whatthefuturespodcast.ca to get that podcast. It's not going to be a live 20 minutes, but it is going to be short content and, more popping content, just something easy to consume. So there's that in the meantime. If you email me, then you'll get the welcome email and then you'll start to get those in your podcast feed, wherever, if it's Apple, Spotify, wherever it is, you will start to see those, appear in those spots. All right. So let me, hit me up with an email if you want to join the What the Futures Insiders. And of course, Lunchbox Crew, the content continues as per usual. And we do have a few spots open. You can check that out at ryandenny.ca. Last thing I'll leave you here with some insights is just, setting floors. If you want to set floors and leave upside open, I know, Brian, you're a big fan of this as well. Setting a worst case scenario, leaving some exposure to the upside. There's some fun strategies that you can execute on your farm here this summer and have some fun with it. So, Brian, anything else on the setting the floors and creating upside opportunity?
Yeah, I mean, we often talk about weakness into harvest, and that gives an opportunity too to use strategies that capitalize on potential gains after harvest. So, particularly if you've had some, done some good marketing ahead of harvest, and you want to see if you can get even better.
You bet. All right, folks. Well, this week's Cuppa Coffee is brought to you by Brownlee's Ag Tech. If you've ever wondered, is the bin full yet? Their full bin sensor 2 takes the guesswork out of filling your grain bins. Head to brownlees.ca. That's the website, www.brownlees.ca. Check out the full bin sensor 2. Free shipping within Canada and the US. All right, folks. I'm out of coffee. I'm actually legit. Well, I got one sip left. But Brian, thank you so much for being here. I think you were like the first or second guest on Cuppa Coffee when we kicked this thing off at the end of January. So thanks for being here, taking all those questions, man. 40 minutes of live content for you. Not easy to do. So I do appreciate you being here.
Thanks, Ryan.
All right, folks, I'll see you Friday on What the Futures. We're going to talk harvest weather, Ag in Motion reflections, and crop marketing for your Friday. So we'll see you then. Thank you so much.